Time to see what's on the radar right now. We are with Barry Schwartz, portfolio manager at Baskin Wealth Management. And Barry, you've got your eye on a couple of groups. Do you want to start Canadian or do you want to start American?
Whatever you like, Roger.
All right, let's start with the TMX, which
Okay.
I think a lot of people think of the TSX and that's it, but they don't really, it's an actual company.
They don't realize this is a multi-billion-dollar company. It owns obviously the Toronto Stock Exchange, the Venture Exchange, the Montreal Exchange. It's involved in derivatives. It's involved in interest rate options. But the bulk of its business now is really focused on selling subscriptions for data, for software that investors need, whether it's energy data, whether it's quote systems, whether it's creating ETFs. This company has done a remarkable job. The CEO, John McKenzie, should be commended as one of the top CEOs in Canada because this was a business that was going nowhere. And given the fact that they diversified their business into a global powerhouse selling software and data, proprietary data, and you're seeing it in the numbers. It had a banger quarter, 17% top line growth, 20+% earnings growth. It's rare to see this type of growth for a boring software provider, give or take. The company is not done making acquisitions. It generates it's a capital light business, so it generates a lot of free cash flow. Has raised its dividend pretty much every year since it's been public, and it's, in our opinion, similar to those companies that I talked about trading in Canada, trading at a discount to some of the other U.S. Providers of exchange and data, like a Moody's or an MSCI. So we see TMX Group being able to grow its earnings at double-digit rates for quite a long time, and no end to the types of acquisitions and add-ons it can do to grow its business.
What's giving you the confidence on that growth, that double-digit growth?
Yeah, so first of all, the company generates high margins from its software business. A lot of its software companies like Datalinks and Vetify and Trayport are selling indispensable information. It's very tied, of course, to the markets. If you think markets are going to do well going forward, then TMX Group should do well. Now that gold prices have been stronger, copper prices have been stronger, hopefully you'll see a recovery in oil. We might see some more IPOs and secondary offerings on the TSX. But they're not betting the farm on new listings. They're betting the company on growing and selling global recurring revenue software to financial services providers, and we think it's proprietary data is a place to be.
Okay. Any concerns growing too fast?
I don't think
anything can grow too fast.
I don't think it is a business that is somewhat cyclical. Of course, when there's not a lot of volatility on the stock market, the results will look less good. When there's lots of volatility and people want to hedge and they want to get in and out of stocks, the TMX Group is going to rock and roll. And so the last few quarters has been more than enough volatility. We're seeing it with corporate earnings, right? Company misses earnings by a penny, the stock goes down 10%. Lots of craziness and volatility there. So the TMX Group should benefit from that.
All right, let's get the other one in, Berkshire Hathaway B.
Yeah, so we saw a downgrade by a broker on Berkshire Hathaway to sell. This is the first time that I've seen a downgrade on Berkshire Hathaway. It's not a very well-studied company on the analyst side because it's such a huge, so many moving parts. You have to understand insurance. You have to understand business operations, investment management. I think Warren Buffett stepping down, announcing that he's stepping down, taking a year to do it is the best case scenario for shareholders. You want that kind of succession. Greg Abel has been working at Berkshire for many, many years, and Warren Buffett calls him one of the best operators of businesses in the world. We're so excited for him to take over. The worries with Berkshire Hathaway is, there'll never be another Buffett. Okay, but Berkshire Hathaway goes on. The worries of Berkshire Hathaway is now that with insurance is in a weaker market. Well, Berkshire has other divisions that are doing quite well. Meanwhile, $350 billion US of cash. And we think as interest rates start to go down, especially in the US, we'll see Berkshire much more aggressive putting that cash to work into equity markets as well as buying business operations.
Okay, and did you have a third stock or no?
No.
Okay.
We can talk more.
We had on the listing, we had a
throw a stock at me. We'll keep talking.
Yeah. We can keep talking about Warren Buffett. We can talk. How about we take a break and we'll talk some more when we come back after the break.